All right, good morning, guys. Today is Thursday, August 3rd. And as always, doing analysis for US 30, um, gold and EU. So a couple of things you guys might notice, I've taken off a bunch of my indicators. Well, so for example, I've taken off the 9 EMA, the 200 EMA. I'm also hiding the trend lines on the hourly time frame. So I'm just trying to make my charts a little bit cleaner because, for example, with this new parabolic lines or parabolic zones right here, it can make your charts just right. Like, for example, right here, if I applied the 1 hour and I extended the parabolic zones, it would just make the chart a little bit messy. And now that we have the upgrade that colors the candles based off of the where price is according to the 9 EMA. So for example, here, if I bring back on the 9 EMA, you'll see ideally with the new setting inside all the indicators, they have the, especially, the main ones, they have this setting that has EMA bar color or called bar color. So once you apply this, it will color your candles based if price is above or below the 9 EMA. So at that point, I really don't need to be having the 9 EMA on all charts anymore. I've also transitioned to again, I'm looking for this chart, for this entry right here. Again, I've transitioned to the 15-minute time frame, especially for the parabolic zones. The reason for this is that, I let you guys know a while back that I was, mostly doing swing trades and all of that. But with this parabolic strategy, this strategy gives us an opportunity to do like quick scalps during the live session. So since I'm applying that, right, I want to apply it on the 15-minute time frame. So that's why you guys might see me now focusing on the 15-minute time frame even during the live session. So we have 7 minutes before this candle closes. So let me go ahead and do this. Now, so as much as we have new strategies, right? So right now we have another strategy. Like my key thing is that I just don't want to get people confused, right? Because this new strategy, to me, I think it's better for scalping, right? Like quick entries, you can get a quick 1:3. But the way I'm doing it now is that you need a bias, right? So whether you're trading gold, EU, or whatnot, you need a bias in the market. So for me, long term, right, I've been mentioning I was waiting for this sell on gold on the daily time frame, and we did get that sell. And from this zone, I'm expecting gold to drop for at least 1,000 pips. So between 1,000 pips and 1,500 pips. This is because for the last 7 years, the months of between May and August, they have had a reversal in the market. So the practice of US 30, I backtested all the way to 2016. And the practice is that, right, you have a yearly high and yearly low. So based off of that, I'm anticipating if we're looking at 2020, what are we in 2023? The possible low of the year is the last week of March 2023 because we haven't had price closing anywhere lower than that. Now, the way I get this mid-range is to, if the low of the possible low of the year is March, we have how many more months left in the year? So there's March, April, May, June, July, August, September, October, November, December, about 9 or 12 months. I'm sorry, about 9 or 10 months, right? Depending on what you're counting. So I would then do the median of those months, and the median fell between July and August, which actually lined up with the back test for the last 7 years. So that's why I was expecting a sell-off in July. So for you guys, like, last week I got burnt by US 30 trying to catch the reversal. The only thing is that I may have front ran that reversal. And I think that reversal is in progress right now because I was expecting that to happen either last week of July or all the way to mid-August. Now, not to say that, US 30 can easily still come, take this high and then create that drop. But in any case, we are in bear territory for US 30. Also, we know that September and August are like one of the worst months in the stock market. Did this close? This is gonna be so far down, but this is the sell. So if you enter this sell, just make sure your stop loss is and for this scalps on the live session, for this parabolic entries, I'm doing the stop loss above either the parabolic zone or above the previous high. So for this one, it might be far gone, this one. So we have 4 minutes. So let's see where this candle is going to close in 4 minutes. But right now you can start weighing where price is likely to head to. or what risk to reward you're gonna use. So for this one, it looks like the stop loss might be like 70 pips maybe. So if you want like a 1:2, then you know that your TP would be like 140 pips. So this, right, the further it keeps dropping, the further your stop loss has to be. So this would be a sell because it's a break. It broke below the parabolic sell zone and retested and is closing below. The only thing is that this thing is dropping so heavy. So your stop loss would have to be like so high. So I mean, I'm pretty sure we're gonna get another entry. Actually, we can do the same thing we did yesterday. Go to the 5 minute and see here. The 5 minute already gave us that entry. This, I don't know if anybody, for those of you who were on the live session yesterday, we did this where if we're expecting an entry on the 15 minute and price is going down so fast,
Yeah,
you would go to,
that's what I've been doing. I mean, it's been working. Sometimes it don't work though, but most of the times it works. If I see an entry on the 15, I go to the 5 and just take it there.
yeah. So this would have been the entry on the 5 minute, but I'll just wait on the 15 minute because I'm already late to the game. So I'm hoping it retraces a bit up. Okay, so right yesterday I did mention the major thing for this strategy, make sure you find a bias for the market. So for me, US 30, right? I have a bias for a sell on the daily time frame. The other way I find biases is that I come to the 1 hour. So you can see the 1 hour time frame, I have all these trend lines, and this is why I want to start hiding them because I don't want to have a lot of junk on, or not junk, but a lot of lines on my chart, especially if they're crossing each other. So right now I can tell on US 30, we are in a downtrend. We're stuck between this trend line to the downside. We're stuck in between this trend line to the downside as well. So US 30 here is likely to touch either this zone or this zone. So at that point, I've already decided my bias for US 30 is a sell. The only way my bias for US 30 will be a buy is if we get a closure and retest above this trend line right here. But for right now, I already know that my bias, and for me, I'd already done this analysis, but I'm just walking you guys through how I do it. So for me, I know my bias for US 30 is a sell. I come to gold, same thing, right? Turn on my trend lines here. US 30 is in a downtrend, lower lows, lower highs, right? What trend lines are we on? So right now, US 30 is, I'm sorry, gold is being supported on this trend line. So right now, gold can possibly keep going down this way, but for me right now, to be honest, I am 50-50 on gold because you can see all of this consolidation. So at that point, I step away from gold, come to EU, look at what my trend line. So right, how do I find my bias? Either looking at the reversal indicator on a daily time frame or a higher time frame, or looking at the trend lines. Mostly I look at the trend lines. EU, we're stuck in between these two trend lines. EU is in a downtrend. Okay, so perfect. I'm biased for sales on EU for right now, but you can see EU is the same thing, a bunch of consolidation. So we've already gotten our biases using the trend lines. So I go ahead and turn off my trend lines. I just don't want a lot of markups on my charts. The other way I'm doing the bias. So what I did, I applied, so keep in mind, all of our indicators right now have that parabolic strategy. And the parabolic strategy is right here. At the bottom of every indicator, you'll find the parabolic SAR. So what I did, since it's not an indicator by itself, and I'll be having an indicator by itself developed for this, and this is going to be strictly for scalping. So it's going to, give you the buys and sells based off of the break and retest off of these lines. But anyway, that's further down the road. So what I did, I just take any of the indicators and turn off everything else but the show PSAR, the parabolic SAR zones. So for me, extend line, I extended till 500. Now the trading view limit is 500. You can, if you do anything above 500 or 600, you'll see that those lines will disappear because trading views limits is 500. So here you can go as far as 500. So, and then you can change the line width between 1 and 2. The default is 2. For me, I just put 1. And then this is how I find bias using, and this is on the hourly time frame. This is how I think about it. So I mentioned to you guys, the green lines are showing you areas to buy. The red lines are showing you areas to sell. Now, here, for example, if I was biased for a sell on US 30 at around 35,246, guess what US 30 did at around that hourly time frame? It tried to break, did not break that red zone. try to break. So this ideally would be a break and retest to the downside. So this was a perfect sell on US30 right here if you were using that parabolic strategy. Let me change this. So this right here was a perfect sell on the hourly time frame because you had a break and retest and it was rejecting off of a parabolic sell zone, right? This could have given you an easy, what is it? 1:2 risk to reward, or looks like even 1:2, yeah, 1:2 or close to 1:3. Now, for me right now, if I was biased for buys on, and there goes US30, I'm not gonna chase this. So this is the entry right here, unless you can survive like 100 pip stop, which for me I do not, especially since this is scalping. This is the trade for US30 sell on the 15-minute time frame. Your stop would be above the parabolic sell zone or above the previous high. So that's the sell, and for you to have even like at least a 1:1. So this looks like a 1:1 risk to reward trade, unless you want to do like 150 pips TP or something. But that would be the trade for US30. I'm not gonna take it because the best one would have been on the 5-minute. But anyway, so I'm still expecting US30. So for me, it's a valid trade, but I just don't want to catch. For this new strategy, I'm trying to have like a 30 pip or 20 pip stop because this is a scalping strategy. So this right here, this entry would be more of a swing trade. But anyway, for anybody who wants to enter it, feel free. For me, I will not enter that trade. I won't even mark it up, but you can see the logic behind it. Let me finish with what I was talking about. So here, if I was biased for a sell on US30, this was a perfect sell. So the other one, what is it? This is gold. So gold here, same thing, right? If you're biased for a sell, you can see we have a parabolic sell zone on the hourly time frame. So if this current candle, hourly candle, closes below 1933, that would be a sell, and you can have your stop either above that parabolic zone or above the previous swing high. So if you have it above the parabolic zone, you can see you can have like a 20 pip stop, right? 20 pip stop and maybe do like a 40 pip TP. Same thing, right? On the hourly time frame, EU, on the hourly time frame, what are we next to? We are next to a sell parabolic zone. For this one, right? Break and retest, and then you find a way to enter it. But you can see, right, due to the trading view limit of extending up to the 500 value, you can see there's some zones that are not going to reach where price currently is. So unfortunately, you lose out on that. So you just have to trade with the most recent ones, but that's how you would manage those. The other way, right, and again, I know it's a lot, so this is where you focus on a trade that works for you. You can tie after you understand. So this is why I mentioned yesterday, if you're using the parabolic strategy, first learn the parabolic strategy by itself. Learn it such that you can identify a trade just by looking at the chart. Do not try to tie it to any other strategy. Don't try to tie it to the breakout scanner. Don't try to tie it to the to the process strategy. Don't try to tie it to the breakout, to the reversal entries until you understand it by itself. And now, once you've understood the parabolic strategy by itself, then you can come in and tie it to other strategies. Like for this sell right here on gold, on US30 on the 15-minute, right here, we have this parabolic sell zone right here. And if I go to a cleaner chart, I'll show you where it's at on the 15-minute. It's this one right here. This one right here. So you can see on the breakout, we had a break and retest. So there's a parabolic sell zone. There's a horizontal line right here. So you had a 15-minute breaking. You had the next 15-minute retesting and closing below. And even at that point, you also had a breakout sell firing. So what you'd be looking going forward if you've understood the parabolic strategy, and now you can tie both of them together, what you'd be looking for is trades in the same direction. So if you're trading a breakout scanner entry, and you want to tie that to a parabolic entry, if you're getting a buy, you'd want to see rejection from a parabolic buy area. If you are getting into a sell, you'd want to see a rejection from the parabolic cell area. So hopefully that makes sense. So even for me, to be honest with you guys, and this is why I didn't want to enter that cell. To be honest with you guys, it is a lot for me even right now. So that's why you see me turning off the trend lines after I
I use
use them.
100, not 500, because the 500 is too much.
You say
It's the 100 is just enough to me.
100 what?
On what you're talking about, the parabolic using a 500
Oh,
is
yeah. So for me, the reason I'm doing 500 is that I want as many lines as possible. So that's why. So sometimes if you use 100, right, you're not, because you see so if you use 100, it means your lines are only going to extend to a fifth of what mine are, if that makes sense. So 500 extends the furthest it can. So for me, I want as many lines here. So you see like this buy right here, probably there was another buy zone somewhere here, but it just did not get to where I'm at. And I know this is the hourly time frame. But anyway, right? I don't know if so. I mean, we can try right here. I don't know if I would still get this line if I put this at 100, because you can see the rejection off of this zones, right? So if I put that at 100, you see it goes away, right? On the hourly time frame for US 30, you see it just went away. So yeah, so for me, I want to use the max because I want to see as many lines back as possible. Because for me right here, if we have this rejection right here, I would want to see, right, at what point would my bias for US 30 change to a buy, right? So I can come in here, like what did I find on my trend lines? So for me to change my bias to a buy, I would be looking for something like this, right? I would look, and I said, for me to change my bias for a buy for US 30, I need US 30 to close above these trend lines, to retest and close above. So at this point is when I want to change my bias for US 30 to a buy. But unfortunately, on the hourly time frame, you can see we do not have a delete. You can see we do not have a buy area around then. The next buy area for US 30 on the hourly time frame is 35,296. So that's why for me, I want to extend as much as possible. Now, looking at the hourly time frame, I can mark these areas up. So this is a buy zone for US 30. Unfortunately, it's gonna come up here. That's the worst thing about this. Let me just use this chart. So for US 30, 35, so this is like a perfect zone to, I was talking about yesterday, either to set a pending order or to wait and see price action here. So for me on the hourly time frame, this is a perfect buy area, 35,298. Because before then we just have all this sell, this is a sell zone, this is a sell zone or a reversal zone to the downside. For gold, my buy area 1934. For EU, my buy area 1.09399. So you want to see a break and retest above these zones. So that's how you interpret these parabolic zones. So which is why for me, I'm saying here in the next 6 minutes, if gold closes here, this might be a nice sell for gold, a nice opportunity to enter a sell at 1932 and even have like a 20 pip stop. And then you can have like a 60 pip TP. You have an easy 1:3. But just make sure that you have a bias in the market. Don't just enter a sell because price has broken and retested a sell zone. If the trend is up, you're of course gonna get burned. So anyway, let's see how if we can find any trades. So I know personally that US 30 is in a sell and it's coming back to this zone. So in this zone right here, we have this buy on the 15-minute time frame because we have this parabolic buy right here, and then we have a parabolic sell. So what is your, you ask yourself, what is your bias for US 30? Looking around even order blocks, here we just have a 15-minute bullish high and low. And this is why I'm saying, right, so this can get like pretty, based on off of how we have a lot of strategies, it can just get too much. So which is why for me, with this, since it's scalping, I really don't care. But unless the parabolic zone is literally lying on a daily or hourly or 4-hour bullish or bearish order block, that's when I would want to maybe consider them. But other than that, I just, since it's quick scalping, I really don't care about lower time frame order blocks. I don't care about looking at anything else, because as much as you try to line this new strategy up with the other 5 strategies that we have, you can get like analysis paralysis, and you can just, which is why I recommend getting the bias off of the 1 hour and then looking for trades that way. Because right here you can see on the 1 hour, 35,246 is a strong sell area for US 30. So this is why, if right, and if you don't have any trend lines, you can use the hourly, which is why I have this hourly setups. You can use the hourly setups for you to find sell zones and buy zones, and then you just trade off of that in like a 15-minute time frame. So for me here, I'm still biased for a sell. And not sure if we're gonna get that. So my stop loss will be here, 241. So this is about 30 pips. So I want to do like a 30 pip stop loss, 600 pip TP. Again, I'm trying to improve my risk to rewards to at least a 1:2 with break even set at a 1:1. So let's see if we get this entry right here. Gold, same thing, right? We need, in the next 3 minutes, we need gold to close this way. Here's another way to interpret this, right? This is why I'm talking about the hourly time frame. Gold is telling you, look for buys wait for buys for when you get a break and retest after 1938. Look for sells if you get a break and retest below 1931. So here, and this was the 1 hour. 1 hour. So we need to see, we also had this other zone. So gold either has a sell below 1931 or 1934 area where we are currently testing. So if in the next 2 minutes, gold breaks and retest, it will be a sell zone based off of this parabolic zone from the end. So just keep in mind, this chart I have right here, I haven't extended the line. So that's why you can't see the 1934 one. But if I come in here and I extend this to 500, you'll be able to see it. But the reason I didn't want to extend on this chart, especially for y'all, can you imagine I have all these extensions and then I turn on my trend lines? This is just, this is why I didn't want to do that. So this is why I just created its own layout. And then that's the layout I just extend, because it's just gonna mess with, and it just makes the chart look worse. So the question is, what sell works? So there's this sell on US 30. So we already know the trend is to the downside, this sell on US 30 or this sell on gold. To be honest, for me, I think I would rather take the sell on gold. And keep in mind, this is on the hourly time frame. So I'll just come in here and use this chart instead, and look for this sell. So I need the next hourly candle to open. My stop loss, probably 1935 area. Let's see, 1934. So like a 20 pip stop. So for this gold trade, and keep in mind, for this scalps we'll be taking, because we will probably be getting a couple during the live session. This one, I recommend doing a 0.5% TP and stop loss. I'm sorry, 0.5 risk. But so actually 25 pip stop and 50 pips TP. So let's see how this goes. And this is on the hourly. So we are trading the hourly, because keep in mind, break, rejection, break and retest, or breakout and rejection off of this sell. And for me, my analysis is that gold is in a downtrend. If for you, you don't have a bias on gold, just make sure you understand what we are doing here. For me, the reason I'm looking to sell is that based off of my analysis, gold is in a downtrend. That's all that matters to me. And then I look for an entry. We are getting an entry here on the hourly time frame. So there's that entry on gold. There's this entry here on US 30. For me, I'm taking the gold entry, and I am waiting for it right now. So 50 pips TP, no, what was it? 20 pips TP, 25 pips TP, and I need to redo this. 25 pips TP, 50 pips. No, 25 pips stop loss, 50 pips. Oh, and you can see that spike up. I didn't even get a chance to enter it, but I'll just wait for it down here. For me, I didn't get a chance to enter it because it moved too fast. I will wait for this price to come back down here because you just had like a quick spike. I don't know if anybody was able to enter it, but for me, I didn't get a chance to enter it. So keep in mind, right, this is scalping. So these things will move so crazily, right? So yeah, so for me, I didn't get a chance to enter that gold. If it does come back down here, I will enter it on impulse. So if gold comes back down to this 1932, 697 area, I will go ahead and enter it on impulse. But yeah, that's just the thing with scalping. Sometimes you can miss a trade or you can just hit stop loss almost immediately. So there it is. Okay, waiting. Coming on the 15-minute. On the 5. All right, so 5-minute entry would be somewhere down here, 1930. 1930, 857. But for me, right, my entry I'm waiting for here because this was the candle spike. So for me, my entry based off of the hourly will be here. So if gold gets there, that's when I am entering. So let me come back to this. Yes, so I am selling. I'm in the trade. Let me see if it picked up. Yes, it did. Yeah, so this trade with a 0.5% risk. So keep in mind, this is scalping, right? You can either get wicked out quickly. So I'm expecting gold to close down or to spike down from here. Right. I'll just leave that and let's see. So you can see US 30 as well. So US 30, the trade would have been here. You would have gotten tapped in if you're waiting for it. But for me, right, just choose which of the two you want to trade, whether it's US 30, whether it's gold. If you do decide to take US 30, stop, of course, above the previous high. So either here or here. And then just do whatever risk to reward works for you. So for me, I'm in the gold trade and not in the US 30 trade. Looks like so for me, I just got wicked out. So that's minus 0.5%. And that's fine. That's why I mentioned. So for this scalping, right, use 0.5% because we'll get like multiple trades for this particular strategy. So you don't want to be risking like 1% or 2% for this trades. All right, so if we got stopped out, so we come back, reanalyze. So what was here? So this trade was valid. It was based off of an hourly. So break and retest. So the retests are rejected back below and close below. So we still know, so for me, I still know that 1933 is a critical sell area. So in that instance, since I got wicked out and this was on the hourly entry, I would come back in here and see, okay, what's going on, say on the 15-minute time frame right here. So 15-minute time frame, the sell area, until we get like another sell zone below, the recent sell zone is at 1934, 40. So this for me would be an area of interest, right? Because you want to see what's the next area. So I can either manually mark it up or I can do the extensions right here. So I can come in here and do the extensions on my own. And probably, so if I do this probably to 10, you'll see that red extend. So let's try 20. There, so you can see this sell zone that's right here. So for me, my bias for gold is still a sell. My bias for gold is still a sell until we close above 1938. So this is the area to watch out for buys. right here, 1938 on the hourly time frame, right? On the hourly time frame, we have this buy zone, 1938.5. So if we get a break and retest there, to me, that's confirmation for change in the buy momentum. Or if we get a high low. So currently, you can see we are forming lower lows. Currently, it's just lower lows. And there's no high that has closed above here, which is why for me, this is the point of reversal for gold, 1938. So for me, right now, my bias is still a sell on gold. And this is also another area to possibly consider a break and retest. But anyway, so right now, again, gold has been consolidating, so maybe not a time to trade gold just yet. So for me, I stay out since that's a minus 0.5% loss. I probably just look for other entries elsewhere. But does that make sense how to trade the parabolic one? Which is why, like in this session, I haven't tied it to anything. I haven't tied it to an order block. I haven't tied it to a breakout scanner. I haven't tied it to the crosses indicator. So this, this is the reason I'm talking about. Just understand how it moves just by itself before trying to tie it to other strategies that we have. All right, so keep in mind, and for me, right, so US 30, for me to change my bias on US 30, what did I mention? I have to get a break and retest off of this trend line right here. So that's when I'll change my bias for US 30 to a sell. I'm sorry, to a buy, if we get a hourly break and retest there. So at that instance, maybe it's just best to wait for either US 30 and gold to determine whether they're going to keep closing down or they're going to go for 1938. EU, you can see EU the same thing. EU is trapped between this buy zone 1.09439 and the sell zone 1.09142, and you can see consolidation. So of course, this is not what you want to trade in the market. So at this point, I just say, right, I have nothing to trade. Just took a small loss on gold, US 30 and gold. They're just, all these instruments look like they're consolidating. So at this point, I just say I'll wait until my bias changes to either side. But yeah, the US 30 trade, this would have been the nice one right here on the 5 minute. Where was that? Was it this one? Where was that US 30 buy? I'm sorry, US 30. So no, it was this one. A break and retest. I forgot which one it was a while back. Okay. But anyway, so stepping away from the parabolic strategy, let's see what zones we are in right now. So US 30, we are in a 15-minute bullish high and low zone. So nothing major for the order blocks area. For gold, you can see we have a daily bearish low at 1941 area. So that's the only other thing to watch out for. For EU, really nothing here as well. EU, we have an hourly bullish high, hourly bullish low here. So possibly getting that reversal on EU. So here, what I would like to see EU do is if we do have these zones right here, and we definitely have buyers sitting here, is that I would want to see a possible high low created for EU, and then I would want to see a break and closure above this zone, and then at that point I would buy EU at 1.0945. So at this point, you can see how you can tie either the parabolic and maybe the order block or whatnot strategy. But you can see for gold, we really did not have anything other than the 15-minute bearish order block, which for me, I don't trade it by itself. There, I don't have that strategy there. For US 30, it's just same thing, 15-minute. So for everything else, nothing there on the breakout entry. US 30 did not give us any entry on the breakout for market open. For this one, right, the crosses indicator still remains undefeated. Take the first 3 to 4 trades. So the first sell would have hit TP. Second sell would have hit TP. Third sell would have hit TP. Fourth sell would have hit TP. And that's it, right? Because it says take the first 3 to 4 trades if you're using the crosses strategy, which is that one right here. And these are the trades I normally see. I take like 1% risk with each. So 1%, 1%, 1%, 1%, you would have already been up 4%. So if a strategy is confusing to you, right, just focus on the others that are clear cut. I will try and get the parabolic one to have its own buy and sell entries, and which can be used for quick scalping. But other than that, I would just, stick to the one that you understand most. If you've found heavy potential on this one, forget about all the other strategies and just stick to that one in particular. If the parabolic one is confusing to you guys, get away from it and focus on the others that you had progress with. So does anybody have any questions? Let me go ahead and update.
Yeah, I got a question there.
Mhm.
Yeah, only a pain in the ass, but do you mind explaining the parabolic strategy? I just popped in here and I missed everything.
All right, let me update this real quick. So we took that 0.5% scalp loss. So yesterday we were up 1.5%. So today lost 0.5 percentage, nothing major. Okay, so the parabolic strategy is this one right here. So I think I have it here, right? So in all indicators right now, if you go to the bottom, so all indicators now have a time filter where you can filter signals based off of the time frame that you trade. So that's one major improvement here. The next major improvement is the bar color option inside every indicator. So if you turn on the bar color option, it will, and for me, I have it on all my indicators. It will color the bars based off of position above or below the 9 EMA. So if you turn on the bar color, every candle that's above the 9 EMA or in and around the 9 EMA, depending on what is it called, margin of error, will be a green candle. Every candle that's below the 9 EMA plus or minus a few errors of margin will be a red candle. So that's the next improvement. The parabolic SAR strategy. So one way to, and you can look it up on YouTube if you don't already know. And for me, I'm not really good at, explaining what it is, but what you're looking for, parabolic zones can act. So think of them as support and resistance zones. So what we know about support and resistance zones is that they can act as both. Support can literally act as a buy zone, but support sometimes can act as a sell zone if you get a break and retest below it. So are we together up until that point? Marcus?
Yeah, I'm still here.
Okay, perfect. So knowing that, once you turn this on, and another thing I did for my indicators, because once you turn on the parabolic SAR zone, especially with some other indicators, it will show some boxes. So those boxes, and I just turned them on right now on my chart. These red and green boxes, those are just support and resistance buys, support and resistance sells. So for me, I take those off because I don't have any strategy that's developed towards those. So these are separate. They're not buys based off of the parabolic zones. They're just support and resistance buys. So for me, I just turn those off. To be honest, I don't have any entries based off of them. So, right, some people maybe might find use of them, but for me, I don't find any use for them. Now, for me, how I like to find to interpret these parabolic zones is that the green zones are telling me areas to buy. The sell zones are telling me areas to, the red lines are telling me areas to sell. The green lines are telling me areas to buy. Now, for me to buy, so again here, this strategy is suitable for scalping and early entries at lower time frames. And it's best if you use it on the 15-minute time frame and above, which is why for me, most of my charts on the left have changed. And you can see US 30 here, this zone is holding pretty heavily. So which is why I've switched my left chart to be a 15-minute chart for now. Now, like the entry we found on US 30. So for me, I was expecting, I was waiting for that sell on US 30 here on this particular candle here. However, this candle dropped so far down that I wasn't willing to chase it this far down. So ideally, I want to sell, like here, my ideal sell on US 30 would have been like if this candle closed somewhere here, like not too far, because keep in mind with this strategy, I want to have a tight stop. So like a 20 pip, 30 pip stop, and then go for like 60 pips CP, whether it's on gold, whether it's on US 30, whether it's on FX pairs. Because keep in mind, for me, this is a scalping strategy. It's not a swing. You can use it on, if you're using it as a swing strategy, maybe use it on higher time frames. But for me, the way I am seeing the opportunity is that it's a nice scalping strategy. So you're looking for, if for sells, you want a break and retest and closure below. So which is why the sell would have been down here. But for me, I just said no, I didn't feel comfortable selling down here. So if you find that the move has gone so far down and you're using the 15-minute time frame, go to the 5-minute time frame. So here on the 5-minute time frame, I think there was one at 9:15 somewhere. Yeah, 9:15. This no. Yeah, this sell right here, that was the previous parabolic sell zone. So 9:15 zone. So here you had this retest because I was waiting for a retest of that area. So if you're using the 5-minute time frame, you could have entered, and it's based off of this one right here. You could have entered here and you could have had a nice stop. So it gives you an early entry. So if for sure you knew that the 15-minute candle was going to close below here and price was dipping so far down, you could have found an entry on the 5-minute to ride price down that way if you did not want to wait for price to close so far down. So the other major thing here is, right, make sure you have a bias. So which is why I showed you guys, right, my bias comes from trend lines. My bias comes from maybe the reversal indicator on the daily time frame, maybe even on the 4-hour time frame. That's how you develop a bias, because you don't want to be trading in both ways. Because keep in mind, this strategy can cut, I mentioned yesterday, it's a double-edged sword. It can cut both ways. So you want to have a bias so that you're like, okay, if US 30 is in a sell trend, I'm only looking for sell entries based off of the parabolic indicator, and that's it. And you stick to that. So the most important thing, have a bias. So number 3, right, watch for a horizontal parabolic line to form in the direction of your bias. So here, my bias for US 30 was a sell. My bias for US 30 was a sell. My entry, if I was trading literally the 15-minute time frame, my entry was going to be here, but I didn't feel like doing it because price was so overextended. And for me, keep in mind, this one I'm using for scalping. So scalping, for me to have traded this zone, I needed to have an 80 pip or 100 pip stop loss. That is not a scalp. That is a heavy move. That's more of an intraday move than a scalp. So make sure. So here, that's the reason, because I was biased for sells, I waited for this red horizontal line to show up. And keep in mind, these lines will show up in real time. They don't show up after the fact. They show up in real time. So if I replay the chart right here, you'll see the moment that the red line showed up. So the red line, if I play the bar, there you go. So you can see this red line showed up in real time when this candle was right here. So for me here, what I was looking for is a break and retest below this red, because keep in mind, my bias was sell for US 30. So right, if my bias is for sell, I need a break and retest below this red line. So if I keep playing the chart, you can see, and this was also during market open, and this happened yesterday also. So you also want to avoid market open, because you can have a bunch of manipulation. But anyway, we got a break, but we did not get a retest. So here is when we got that break and retest, because this candle broke and this candle looked like it was definitely going to close below, which is why I'd mentioned to move to the 5-minute time frame and try to catch that push down. So you can see this candle kept, so this candle closed below, so we got that break and retest, and you can see the candle opened bullish to fake out and stop people out, and then it literally melted back down to the downside. So that was that's step number 3. Watch for that parabolic line. Identify the trend by applying the Bacala filter. So if you're gonna sell, if you're looking for sell, don't sell when you have a green candle. Don't sell when the candles or the candle of entry is a green candle, and don't buy when your candle of entry is a red candle. So keep in mind, for me, I have the bar color already applied. So it's not like I apply it in some times and don't apply it in other times. For me, 24/7, the bar color option is selected in all my indicators, such that I know that price is either bearish or price is either bullish. And if I see red, I know that price is below the 9 EMA. If I see green, I know price is above the 9 EMA. So that's another thing you need to consider. Wait for the break and retest. So I already mentioned that. Wait for the break and retest of the parabolic line and enter on the closure of the retest candle. Set stop loss below or above the parabolic line, depending on the direction. A better stop loss is probably below or above the previous high-low. So for me, I'm normally, depending on the volatility in the market, if there's low volatility in the market, I'll set my stop loss above or below the parabolic line. If there's volatility in the market, like New York open or during mid New York or open to mid New York, I'll set my stop loss above a previous swing high or swing low zone. And lastly, make sure, note that parabolic lines can act as reversal points. So as much as here, this zone, I don't know where US 30 is right now, but as much as this zone is red, it can act as a reversal point if we get a break and closure above it, which would also line up with a break and closure above this green zone. So the most important thing is to know your bias and know when your bias will change. So for me, I would still be selling US 30 right now, and it actually tapped an entry here. I would still be selling US 30 right now until we get this. Until we get a break, closure above this trend line right here, break, closure, and retest and closure above, that's when I will change my bias to buy for US 30. So some of these things you might just have to keep practicing them such that it's muscle memory, such that you just keep seeing them. But the most important thing that I will say is that always have a bias in the market. If your bias is for a sell, don't try to take any parabolic buys. If your bias is a buy, don't try to take any parabolic sells. That's all that I'll say. So any questions on that? And you can see gold, ideally, I just see it as a fake out. Look at that. Gold is coming back down. So for me on gold, I am still biased for a sell on gold, as much as we just got stopped out. But that's the thing with scalping. You'll just have a lot of those fake outs happening. Does that make sense, Marcus?
Yeah, so how many pip stop losses is too big for a scalp then?
So for me, I'm eyeing up to 30 pip stop. So if anything is above that, then maybe I look for a swing entry with it.
And then how far, like you said, you were entering out the 5 minute because the 15 was too far gone.
Mhm.
How are you looking for, how do I word this? How far down is too far gone, I guess?
I mean, you'll tell,
like
right?
50 pips is too much if it's already moved, or are we looking at like 20 pips is too far gone, or like when you know when to switch 5 minute?
If your stop loss will have to be more than 30 pips, that's what I'll say. If your stop loss has to be more than 30 pips, that's too far.
Yeah, but I mean, like, you know how you were saying, like, the 15 minute was too far gone. It went down, the move already happened, right?
Yeah.
What you're saying. So how do you know, like, how do you know what is too far gone? Like, okay, like, oh, the move already happened. It already went down 50 pips. Like,
so
you know it's already happened.
So like right here, if I'm on the 15-minute time frame, so for example, here, if I replay this bar, my interest is where it's priced at. So maybe at 14 minutes and 30 seconds, price was here. So I know that we are in strong bearish territory, and at you have like 30 seconds before the 15-minute candle closes. So that's the point you start measuring where your entry would be. So you put like what, 30? So let's say you want to 1:2. So you have a 60 pip TP and maybe 30 pip stop loss. So 30 seconds before the candle closes, you start measuring that. So for me here, I knew that if I had a 30 pip stop here, it's not going to be above the parabolic zone. Does that make sense? So
you're always going for 1 to 2.
No. So for me, I'm not the best guy, the best person to teach you guys risk to reward, because ideally for me, I used to do 1:1, but I'm trying. So even for me, this is learning. I'm trying to find the best risk to reward. So for me, with this strategy, yes, I'm going for 1:2, and I'm setting break even at 1:1 or securing.
Do
But
you
it's
find this a high probability to do like a 1%, or
Oh,
with
no,
these
don't
trades?
do one unless it lines up with other entries. I just showed you an entry here for the breakout scanner where the sell lined up with a parabolic break and retest on the 15-minute. Unless it lines up with anything else, do not. And also, on the other hand, I guess it depends. How many trades are you taking a day? For me, with this strategy, I'm going to take like 5 or 6 trades a day. So it also depends, right? How many trades do you anticipate to take every day? So if you're looking for 1 trade a day, that means that you will have to, find a trade that has a 80% probability. So for me, with this strategy, I know that I'm looking for between 1 and 5 trades a day. So I don't care if 1 trade or 2 trades hit stop loss. That's fine. I can easily, maybe get another trade mapped with another strategy that I'm going to enter that trade with a 1% risk. So again, here, right, this is a new thing. I literally found it yesterday. So the knowledge I have right now is literally something I've just backtested for the last 20 hours. So it's not something that even the 30 pip stop, maybe the 30 pip stop is not good, but right, it's up to you guys to, based off of these requirements I've given you here, based off of these strategies that I've given you here, this 7 requirements for the parabolic strategy, it's upon you to use your back testing based off of this and find what works for you and find what doesn't. Maybe a 1:1 is fine with this. Maybe a 1:3, maybe a 1:4, I don't know. So for me, I just gave you guys this 7, and keep in mind this strategy is like a day old. So, but by back testing it, the least I know is that your stop loss needs to be above the parabolic zone. So if you can stomach a 70%, 70 pip stop, well and good. If you cannot, then you cannot. So for me, I just know that I want a 30 pip stop, at least at most a 30 pip stop for all trades that I'm taking with the parabolic entry. So that doesn't have to be for everybody. And there goes US 30, right? So this, you see that entry I was waiting for? There goes that entry you could have taken. Now, if you get an entry at the parabolic zone, of course, your stop loss is not going to be at the parabolic zone because you would have no chance. I literally wouldn't have a stop loss. So if your stop loss in this instance, because my sell area was this parabolic zone, which I was waiting for, I would have done my stop loss above this previous swing high, which is somewhere around here. And this was a 213 to 241. That's a 27 pip stop. And guess what? US 30. So if I was doing 27, or looks like a 20, I'll just call it a 30 pip stop and 60 pip TP, I would have already secured a 1:2 right here. So hopefully, that makes the most important thing with this strategy, have a bias. That's it. So there you go. This would have been a nice,
Right.
yeah.
Makes sense. And then I just have another question on it's about the reversal indicator. If you get, let's say on US 30, you get a reversal or a buy on the daily time frame, would you still be looking to go for a 200 pip, or since it's a higher time frame, would you go more or less?
So it depends, right? If it's how I've been trading reversals, so for me to do on the daily, it would have meant that I got stopped out on 5, 15, 30, 1 hour, 4 hour. It would have meant I got stopped out of US 30 like with 4 entries. And I think last week I got stopped out with 3 entries because I started, I think, at the 5, 15, and 1 hour. So for right
Yeah,
now,
me too.
based off of this, my stop would just be above the previous high. And for me
Yeah,
with
because I
this,
saw that forming today.
yeah, for me with this one as well, right? You also need to look at, say, historical data. So for me, I'm basing this off of historical data. So here, for you to know how big, what stop you need, you come back. Let's see what happened in 2022 for the sell that happened in August. There was literally no drawdown. Went straight. There was a bit of drawdown, but it didn't come back to take off the high. In 2021, around that August sell time, the Price came back, gave us a sell, but came back, took off the high and created a higher high and gave the sell. Actually, never mind. There was a sell on 2nd of August, came back up, took off the high and gave us another sell 17th August, and that sell went straight to TP, or would have dropped like 1,035, 300. Would have dropped like 2,000 pips and did not come back up and taken off the high. In 2020, and 2020 was an anomaly year, but let's see, 2020, same thing. The sell in 2020 came in July, end of July. This one would have gotten stopped out if you put your stop loss above the previous high. But for me, I don't consider 2020 because of COVID. In 2019, the sell came in July, did not come in August. So this one would have been a nice sell. It didn't come to take off the high. So for me right now, right, for you to determine where you want your stop loss to be, it has to be dependent upon historical. So this is not dependent upon the regular reversal strategy. This is dependent upon the last 7 years. What has US 30 done in July and August when it reverses through September and then creates the yearly high when we get that by late September. So for me here, I'm looking to sell US 30 through September. And then first week of October, last week of September, I'm looking to buy US 30 for creation of the yearly high. So that's for me right now. If I was in this sell, which I'm not, I already made profit yesterday. And the did I make another profit? No, I think yesterday when we made the 1.5. So for me, if I was trading this, it looks like you need a stop loss of 500 pips for you to be above the previous high. So which means you need your profit level is 1,000 pips. And for me, I'm expecting US 30 to drop 1,000 pips from here. So I would say have a stop loss of 500 pips. And then, you know, historical data is on your side that they are less likely to come back and take off this high before the drop comes in.
Yeah. Now with, you know, on a challenge, I can't hold trades over a weekend, so it's probably not a smart idea to enter it on a Thursday. And then because Friday it could go up 300 pips in theory.
Yeah. So here, if looking at the daily time frame, what I'm looking at here, I would have, you see where the sell entry came in. If I was literally looking at this, not even trading any other strategy, I would have waited for this daily to open. If I saw this push back to the upside, which was 301 to 382. When I saw this push back above and price was ideally above the 9 EMA, I would have set a sell, a buy, whatever, a pending buy order where the daily closed yesterday. And that way you have like a 80 pip stop. And right now you'd have been at, you'd have been like a 1:3 right here. Because if you had this, if I just lower this, you'll see this was a 1:3. So if I was trading with that logic, so that's another thing with because for me with this entry right here, I knew that, you know, because I've been waiting for this daily sell. So I knew that the probability of US 30 dropping from here was very high. So, but if I knew I couldn't hold, I wasn't willing to hold like a 500 pip stop loss, I would have waited for that closure and then observed what price does or what price did. So keep in mind here, when this closed, it closed at the end of day yesterday, which was around 4 p.m. So keep in mind, we do not, or I recommend not to trade anytime 3 p.m. Eastern Standard Time and 11 p.m. Eastern Standard Time. So what I would be doing yesterday, I would have observed what is US 30 doing here. What is US 30 doing? Open of Asia up to late Asia. So if I saw US 30 go up, guess what? I would have just set a pending sell order. I'm sorry, I think I said a pending buy, a pending sell order at the closure of the previous daily candle, such that if US 30 came back down, it would have tagged me in and then maybe did a 100 pip stop. So that way, right, that saves you and gives you your quick 1:3, 1:2. So the question is always like, what are you waiting for? Like for me, I knew this daily candle, I've been waiting for this daily candle for a week. So if I knew that, what can enable me to have a nice risk to reward, like not even thinking about other strategies, even literally thinking of general trading as well. What entry can give, some people say, expect retracement to 50% of the candle. So I could have easily also entered on impulse. This daily candle was 35,628. Just a second. This daily candle was 35,628 to call it 35,241. So I'll call it 228. So it was a 400 pip candle. So what you could have done, you could have entered on impulse and put your stop loss above the halfway above the length of that candle. So you could have had a 200 pip stop. And right now you could be on your way to, is that 200? Yeah, about 200 pip stop. Right now you could have been on your way to a 1:1. Yeah. So just, ask yourself, how long have you been waiting for this? What's the major reason you're waiting for this? Okay. If you don't want a big stop loss, what can let you have a small stop loss and still be in the same trade? It doesn't have to be any of our strategies. It can be just basic support and resistance. It can be basic, right, retracement to the 50%, and then you go ahead and enter that way. So there's like so many ways to have entered this trade. But if it was me, since for me this trade, I just want my stop to be above the previous high, I'll just do 500 to 1,000 and then hold this for however long. Which is why for me, I'm trying to improve that risk to reward, which allows me. So for me right now is what can allow me to have a tighter stop and a better risk to reward. If that is the parabolic strategy, guess what? I'll get rid of, I won't use any of the other strategies during my day trading. I'll literally stick to this one. So like right here, right? This is an example of gold. So gold is approaching. So gold on the hourly time frame, look at here. Gold on the hourly time frame is telling us we have a buy zone at 1938. So this is the second buy zone in a row. So we definitely know, as much as we have a buy zone, we have a possible, it can act as resistance. So right now, is my bias changing to a buy for gold? I mean, I don't know, gold is still consolidating, but you can see gold on the hourly is above the 9 EMA. Okay, so possibly changing to a buy momentum, and you can see the candle is almost changing to green on the 1 hour time frame. Okay, I come back to only the parabolic markups. You can see those two buy zones we have on gold. So the best entry on gold here is a break and retest and closure above on the hourly time frame at 1938. Now, we know gold can spike all the way up easily in one candle. So if I'm sure, if I'm sure that gold, or if I have a large probability that gold is about to spike up from here, guess what I'll be doing here? You see this 15-minute entry on gold? We are breaking above, we've broken above that parabolic zone, and we are retesting and possibly closing above. So maybe this is that possible buy on gold. And we'll see, let's see in 7, I can stay for 7 more minutes and see what happens here. But you can see the momentum that's coming in on gold. So here, this is the point. I have 6 more minutes, and this is on the 15-minute time frame. If I go on the 5-minute time frame, if I don't want to, let's say I really want to enter this position, you can see in the next 1 minute, so let's see, 1 minute, the 5-minute candle will probably close above this parabolic zone. So it's actually already closed above a previous parabolic zone and ideally retested. But if I want to enter on this one, I would be looking for a break and retest, which means that I would have to wait for the 15-minute. That would line up with the 15 minutes. So at this point, if I'm really looking to buy gold here on the 15-minute time frame, I need to ask myself, has my bias changed for a buy? I clearly see that we have this strong push to the upside. However, I know that these parabolic zones can also act as points of resistance or reversal points. So for me, to be honest, gold is still in consolidation. I don't see any, until we get an hourly closure and retest above 1938, I don't see any need to change your bias in the short term. Unless you have other confluences that show you gold is in an uptrend. I'm pretty sure if I turn on even our trending, What was this? Even our trend feature in here, gold is gonna be
Oh,
in
very
a,
low time frames, like 5 minutes, but nothing else other than that.
yeah. So you can see gold is in a downtrend, but even in this downtrend for our channels indicator, you can see that we are coming into the green zone of the downtrend. So gold is probably reversing, but the question is, right, what's the probability that these parabolic zones are going to act as resistance and gold dies back down from here? So for me, since I'm asking those, those many questions, I'm not convinced that gold is in a buy just yet. But if anybody out there, even looking at what's surrounding gold, we don't have any anything else. We don't have any bullish order blocks. Looking at the breakout scanner, let's see what's going on for gold. So if you find yourself like questioning if you're in an uptrend or a downtrend, just know that you're not. So here, what I can tell, I know with the reversal entry, there's definitely a buy entry on gold on the reversal entry. The breakout scanner does not have anything, but the reversal scanner, the reversal indicator, I'm pretty sure has buys, yeah, because you can see here, we had all these buys right here. And these are valid buys on the 5-minute. If you go on the 15-minute, I'm pretty sure you'll find valid buys. So it's just a question of, right, are you convinced that gold is in an uptrend? If you are, the entry would be in the next 4 minutes. So let's see how this candle closes in the next 4 minutes. But for me, I'm not going to take it because I'll just be trying to force a trade. So I'm not convinced that gold is in an uptrend. But let's see where this 15-minute candle closes in the next 4 minutes. Should have just stuck to US 30. Would have made that 0.5% instead of losing, but anyway, that's how it goes. EU, so EU as well here. EU is telling you a story. EU is telling you on the 15-minute time frame, right? That buy we talked about on both on the 15-minute and on the green, and I'm sorry, and on the hourly time frame. So that's how I interpret these parabolic zones. If I see green, I see possible buy area. If I see sell, I see possible sell area. If my bias is a sell, then I just wait for an entry at the sell area. If my bias is a buy, guess what I do? I wait for an entry at that buy area. So just as mentally or subconsciously assign these parabolic zones as buy or sell areas, and then just make sure you have a bias, and that's all you need. Just wait for a break and retest, and then just find that entry. So let's see what if this current candle, 15-minute candle, closes below this zone, that will be the end of this stream, because again, it would have invalidated a break and retest. But if we get a break above, I just want to observe how gold goes. I mean, I'm not going to take the trade, but I just want to see what happens there. I would have taken it if my bias had switched for a buy on gold, but for me, I don't have that bias. Right, so here, so let's assume, and this is just an assumption, right? Let's assume your bias is a buy for gold. So here's what I'm talking about. We have like 2 minutes before this candle closes, and it's a 15-minute candle. So this is where you start analyzing or marking up your risk to reward. So you can see if this candle does close above this parabolic zone, and you want your stop loss to be below, your stop loss would probably be below the current low. So assuming gold does not go lower than this would give you a 10 pip stop, right? Which is crazy for gold. So if you have a 10 pip stop, you can easily here do 10 pips, right? So that you can prepare. And I'm just assuming, I'm not taking this trade, but I'm just saying, like, if I was taking this trade, this is how I would start preparing for it, right? I would start seeing how low is this, so it would give me like a 10 pip stop. If I'm going for a 1:2, that means a 20 pip TP, and then I would just wait here. So this is just an example trade, so let's just see what can happen. If you want a wider stop than that, hey, you can do a 30 pip stop. You can probably do here and just increase your TP, because 10 pip is actually 10 pip is crazy. Unless you're going with like 10 lots on gold to risk $1,000 and make 2,000, 10 pip is just crazy on gold because you can easily get kicked out by spread and all of that. But you know, let's just see how this trade, how such a trade would go. And another reason I'm doing 10 pips here is because I don't want to be on the live session for, because these are 15-minute candles, so I don't want to be on the live session too much. Yeah. All right, so 14 seconds, doesn't seem like this candle will close above, so this trade might, you know, not be a trade, which is why, right, I'm not yet convinced that we are buying gold just yet. Yeah, so you see we got the break, but we didn't get the retest and closure above. So, you know, again, it's still an area to keep to look out for because you can see all these rejections around this area. But unless you have a bias, your bias changes to buy for gold, you know, no need to just enter on impulse or anything. Any final thoughts or questions before we end the session? All right. If not, I will see you guys tomorrow. All right, bye guys.